Good morning. I'm Pete Najarian. This is the take on this Monday morning and looking back to last week and looking at today. Wow, we really do have some pressure on the markets. There are so many different catalysts out there right now that are pressing the markets lower and lower and lower. And it's really been an amazing thing. Just let me give you a couple of stats over Thursday, Friday of last week. So Thursday, everybody was nervous, right? They were talking, well, CPI, and it really became focused in the final couple hours of the day. Dow finished down 640 points. Then we get into Friday. We actually get the CPI number. We talk about inflation till we almost, fall over. And Dow's down 880 points. So you get a two-day total of close to 1,500 points. And the NASDAQ was not too terribly far behind either. You combine the 2 days for the NASDAQ as well, we're talking about a 700-point move to the downside. So certainly there was nowhere to hide. Everything was getting sold, so it felt like. And as a matter of fact, today it's even a little bit worse because it's been very difficult to find stocks in the green, not just sectors, but stocks. But all that being said, we did have the volatility index start to spike up. We got up close to 30. We didn't actually get through 30. As a matter of fact, by the time we closed, because people priced in the weekend, rather than being at 2960 or some of the highest levels that we were on the volatility index, actually pricing in Saturday and Sunday, it moved all the way down and suddenly we actually closed at upper 27. So something's still pretty significant out of that 20 to 25 range, but not closing up there near 30. Today's a little bit of a different story, at least the start of today. Crude seems to be hanging right around that 120 level. The other big catalyst outside of CPI, how about what we're seeing going on with the 10-year and the 2-year as well? Because you're seeing this, and this is something that we've been talking about for a while. And again, I heard guys on different television talking about, well, it's oil, it's this. Oil is certainly the catalyst, but it's not necessarily the movement of oil right now. Right now, the movement that is really reflective of the markets is that inverse relationship that we've been talking about, the 10-year with the 2-year and everything else. And you take a look at that 10-year, gets up above 3, people are selling. All of a sudden you get that 2-year on the big ramp up over the last couple of weeks. And that's a huge move from under 250 to back over 3.1 on the 2-year. That was something that really did stand out as well. So that was what really, I think, accelerated some of the selling that we are seeing. Now, once again, they're buying when we go under 3, selling when we're over 3. Take a look at those, the 10-year and the 2-year right now, and it is a very, very interesting to see that. Volumes, yeah, the volumes did pop. Of course they did. We had so much activity, but a lot of that activity from a volume perspective, more puts than we've seen in a very long period of time. I'll just put it that way. Amazon still is the leader at 2.3 million. You had Tesla, 1.7 million contracts. You had Apple, 1.69 million contracts trading. So we did see a lot of activity in those types of names. There's no doubt about that. VXN actually had a pretty good spike up towards 34. So that was on that move to the upside. That's another one of those areas of volatility got to keep our eyes on. We've talked about that one in the past. It had multiple closes over 40, despite the fact that we weren't seeing that same kind of movement out of the VIX itself. But let's remember, volatility index of the NASDAQ is certainly very, very important to keep an eye on. Every single sector was in the red. Nothing was safe. Everybody's looking for a safe zone. There is no such thing right now. People are just looking to sell and get into a comfortable spot. And that comfortable spot is to not be holding stocks right now. And obviously, as we talk about the 10-year and the 2-year, that really is reflective of that as well. Consumer discretion, absolutely hammered down about 4%. Technology, just behind that, a little less than 4%. Financials were a little less than 4%. But we're talking about some big numbers and some heavy, heavy selling. What was actually working? Not a whole lot on Friday, but Newmont, Hershey, Kellogg, you kind of get the idea of at least what was kind of working, kind of hanging in there. There wasn't too many areas in the marketplace, but there was some very specific names. Oh, and the Chinese names as well. As a matter of fact, that didn't get highlighted enough. It's something I kept pointing out, different producers on Friday. The Chinese names really stuck out to me because they were trading so well relative to what we were trading like, which is not really the way it usually works. We also had a lot of negatives, and when you look for the negatives, you can just look and throw a dart and you're going to find just about anything. But Goldman Sachs, JP Morgan definitely leading on the downside with some of those financials. You had Microsoft, we had Apple, we had Amazon, all getting hammered to the downside as well. DocuSign was down 25%. So that's really something that just really did stand out as well. Stanley Black & Decker, you can go through the entire list. Royal Caribbean, there's a long, long list. We know everything that was getting sold off, and it was getting sold off in an absolutely brutal way. By the way, just going to say this real quick. On tomorrow, I'm going to be joining up with the Rebel Pit guys. We're going to be talking about mastering momentum. That's exactly where we are right now, right? Trading momentum. And by the way, one of the things I wanted to point out to you was we had so much buying in a multiple of ETFs. The put buying was extraordinary, and hopefully you got a chance to tune in for the halftime. Talked about it again at the 5. Market's already closed for the 5 o'clock show, Fast Money. But at midday, when we're looking at that, we're seeing a lot of the unusual buying that was just unbelievable size. When you buy 100,000 spider puts, that is saying something, right? And you buy 30,000 more, and then you go over into a different ETF, and you're buying here. I mean, across the board, we were just seeing a lot of put buying, and by the way, seeing a little bit more again today. They've been right. Will they continue to be right? That's going to be something that's going to play out. We'll see. Remember those EFA puts a while back, not too terribly long ago. They're still there. Those are starting to move pretty rapidly, and basically that's an ETF that's outside of the United States, and that's what that's looking at. So anyway, start off today terrible. Down 550 points, down 350 points. Call it for the Nasdaq. Nasdaq has been slipping. It was down about 440 last I looked. Matter of fact, the Dow had slipped a little bit and got a little worse, down 650. Last I looked, down 770. But things do change. They will and could change very, very rapidly. Looking at the volatility index, yeah, we're well over 30 now. Now we're at 32. As a matter of fact, we're sitting in a range somewhere between 31 and 33 right now for the volatility index. Wouldn't be surprised if it continues to make a little bit of an elevated move, even higher than that. You got nat gas close to 9. I take a look over at crude. It's off that 120, but not terribly far, sitting right around 119. You're looking at the 10-year. 10-year, last I looked, and it's shifting around a little bit, but call it 3.25. Then I look at the 2-year down about 315. So we are still seeing those moves to the upside, and in a pretty positive way, moving away from 3 and just kind of continuing to accelerate to the upside. That's probably why we're seeing the acceleration of sellers as well. Bitcoin absolutely getting hammered today, and that is a big story because when you get underneath 25,000, you approach 24,000, we're looking at Bitcoin. That's pretty monstrous move to the downside. Call it something close to 14% or something like that. Really getting hammered. I look over at Tesla, and RBC cut the price target. RBC finding themselves a little bit more and more negative. That stock down well over 6% last I looked. Every single sector, again, just like last week on Friday, every single sector once again in the red, and in the red in a big way. It's not like they're flirting around with maybe getting into the green. It doesn't look like anything wants to get there. You have the financials down about 2%. You got technology down about 2.5%, now 3.5%. Materials down about 3%, now about 4%. I look over at energy. Yes, energy. I did say energy. Even with not much going on really with crude, energy was down about 3%. Last I looked, it was down more than 6%. So they're coming after a little bit of everything. And oftentimes we've seen that in the past where they're selling where the profits are. And people who've been in energy names had a nice run. Now all of a sudden taking a little bit of a breather and saying, you know what? I'm getting damaged over here. I'm going to take something off the table over here. Seems to be the mentality that we're seeing because it's not that oil has dropped significantly by any means. By the way, in terms of positive stocks, I'm not kidding you to say it was so hard to find anything in the green about 3M. Dang near the only thing practically I could find. Now, I'm sure there's all kinds, but a lot of different stocks were kind of moving around near green, but not quite there, or maybe just a little bit above. But it's kind of the usual suspects. You got Pepsi, you got Coke, you got Cisco, you got Walmart, you also got McDonald's, all kind of flirting with that level. But when you're looking at sellers and what's really negative right now, cruise ships, once again, you look over at Carnival and Norwegian, they're getting absolutely hammered. Boeing's getting hammered. I'm looking at the casinos. They're getting hammered. When I look at something like Wynn, throw in Caesars, throw in a little pen, DocuSign, follow up, just getting hammered again. Datadog. The list goes on, and the list seems sort of like the same list oftentimes, but that's because these names that were way up here are suddenly finding themselves in a different zone. Moderna getting hammered as well today. I have two unusuals, then I'm out of here. I do have a double-double today, though. I'm going to be on the noon show. That should be a lot of fun with Scott and the gang. And then later on, I'm also going to be on the 5 o'clock show Eastern time, so 4 o'clock in the Central time zone as well, on Fast Money. That should be great as well. In between there, John and I have our Rebels Edge, so get ready for that. That's going to be great. Last week was our first run. It was fun. It's going to get better. It's already great, but it's going to get better. We're really excited about what's going on with the Rebel Edge. Catch it today at 12:30. That's Central time, 1:30 Eastern time. It's going to be live. It's going to be great. Starting number one, Spider. The SPY, we talked about that last week. We talked about it on Friday. All that buying, puts. They came out today. Are they buying calls? No, they're buying puts. So with that, now trading the Spider right around 381 right out of the gate. That was the first option that hit it unusual. 28,000 of the July 372 puts. The Spider was at 381. They're buying the 372 puts. They're hedging those by selling the 362 puts. Very smart trade, giving themselves a little bit and taking some of that extra volatility that they've had to buy, taking a little bit of that pain off the table, because this actually is about a $3 spread on a $3 cost on a $10 spread. That was pretty interesting. IWM is number two. Now this one is also pretty big, close to 174 for the stock price or the ETF price. 30,000. So we had 28,000 of the Spiders. We got 30,000 of the IWMs. The July 167 puts, they were going for about 4.25. They were also rolled down from the 170 puts. So somebody who is making some money wanting to roll down and stay in this trade, looking for even further downside. Keep an eye on this one as well. 30,000 July 167 puts. Folks, have a great day of trading. I know it's going to be tough. It's going to be very, very tough. Stay disciplined. Stay within your zone. You don't want to find yourself with blinders on the sides. You always want to stay in your zone. Folks, have a great day of trading. I'm Pete Najarian. Look for us on the Rebels Edge later on this afternoon.